So I thought institutions also were not able to invest yet. So you get the first time ever a chance to front run them because you know they're coming, but they're not in yet. So I thought, well, if you are young, this is going to be the biggest opportunity you've got, and it's going to suck in millions of people. And it has. I mean, Coinbase, monthly active users is 9 million people, which is far larger than Interactive Brokers, Schwab, Fidelity, because people can buy a fractionalized part of a Bitcoin. They can't do that with a Berkshire Hathaway. It also has higher returns, so to make up for the lost time that everybody's had and the inability to gain other assets. So it's been extraordinary. I mean, MBER wrote a paper I read yesterday about what's happened with crypto wealth in America and how these kind of younger people, it's been the thing that's allowed them to buy houses.
According to Raoul, this moment marks an unprecedented shift in investing history, granting everyday investors the ability to anticipate institutions' moves by purchasing cryptocurrencies and reaping substantial profits from their investments. Raoul, a macroeconomic expert and a prominent figure on Real Vision, was among the pioneering analysts to explore Bitcoin and cryptocurrency's potential as investable assets. From the outset, Pal held a conviction that blockchain offered a superior financial system compared to traditional finance. He foresaw institutions inevitably entering the space, a forecast now realized as BlackRock, Fidelity, and Charles Schwab make their foray into the cryptocurrency realm. For more insights, stay tuned until the end of the video, where Pal explains why this presents an unparalleled opportunity for the younger generation to amass significant wealth.
So, if I go back to the Bitcoin example, because that's the most extreme, is I bought it at 200. It went up 5x in 3 months after I bought it. I'm like, holy shit, I'm George Soros. I'm the best trader ever. It then fell 87%, but I had a 5-year time horizon plus when I first bought it, but longer. Then it got very complicated in the space in 2017. They were forking different chains and all this stuff. And I'm like, I want out. But I made 10 times my money, sold that at 2000. Now, that was because I held all the way through the volatility. I got compensated for that by the returns. Now, you don't always do so, but that's what you're trying to do. And I sold out, which I should never have done. So I was always interested in it. It's not like I lost interest. So I followed the space. We educated people on Real Vision. But, after 2018, it was a big bear market. 2019, I started really focusing on it again. It had rallied off the low. It then tested and it built a beautiful chart pattern, this lovely giant triangle. And it reminded me of the silver chart back in 2003, where we built this big triangle. And what it does, it tends to hit the top of the triangle. Everyone gets ready for the breakout. Then it drops back into the middle of the range, wipes out all the short-term longs, and then explodes. That is exactly what happened in March 2020 and April. And I just went, I know this. I know how it works. So I started getting, beating the drum about this, started getting very long. And then eventually my whole understanding of the kind of risks I wanted to take changed because I realized that this was a supermassive black hole. It was the best performing asset the world had ever seen. And due to its unique properties of Metcalfe's law and adoption models, it was likely to remain so. So I just started looking at everything versus the chart of Bitcoin and realized that everything was an inferior asset and anything would be a suboptimal asset allocation. Now, normally you would say you want to build a diversified portfolio and you need to be more careful. And I'm like, I've got an income stream, I've got a savings pool. Your savings pool was never as much as you want it to be. Here's the once in a lifetime opportunity. So eventually I just stopped investing in almost anything else. And that was this irresponsibly long phase, which is like, well, this is my one bet. This is the true bet. Because I thought the macro had gone down to the simplest possible thing, which is monetary printing was debasing the currency. That optically makes assets rise. When I rebased all assets by the Fed balance sheet, because that's what I was using at the time, I've got more complex since then. The only two assets that outperformed the balance sheet, i.e. were actually going up, were crypto and tech. But crypto was going up 10x the speed of tech. So I'm like, okay, this is the one bet. This is the biggest bet. It's the same thesis I had in 2012-13, but now was the real time to get involved. And, yes, I still have some tech investments, other stuff. I occasionally trade around bonds and other bits and pieces just for the vanity, not for the performance, because really, it all comes from this. So it's really changed. I'm now ultra big picture, ultra concentrated. I don't use leverage. And my hypothesis was, if you're in your 30s or early 30s, you have an inability to buy property. You have an inability, the amount of equities you can buy versus your parents from your disposable income is minuscule, and bond yields were virtually zero. So how the hell are you going to generate wealth? I also understood that the financial markets are broken. There's excess leverage, and they're going to have to change the system, which was my original hypothesis in 2013. And the blockchain technology was a great way of rebuilding financial markets from scratch. And that these were going to be, not parallel paths, convergent paths. So I thought institutions also were not able to invest yet. So you get the first time ever a chance to front run them, because you know they're coming, but they're not in yet. So I thought, well, if you are young, this is going to be the biggest opportunity you've got, and it's going to suck in millions of people. And it has. I mean, Coinbase, monthly active users is 9 million people, which is far larger than Interactive Brokers, Schwab, Fidelity, because people can buy a fractionalized part of a Bitcoin. They can't do that with Berkshire Hathaway. It also has higher returns, so it's a make up for the lost time that everybody's had and the inability to gain other assets. So it's been extraordinary. I mean, MBER wrote a paper I read yesterday about what's happened with crypto wealth in America and how these kind of younger people, it's been the thing that's allowed them to buy houses. It's also got them into the stock market because they've diversified, because it is a very volatile, tough asset to be involved in. And then so people diversify afterwards. But so that Bitcoin life raft is not only saving the future financial system, they're saving your future purchasing power from the debasement, and it's giving you an opportunity to actually generate real wealth on a scale that people's parents were able to. So again, when you zoom out, the issue is the governments don't collect enough taxes to pay for the interest on the debt. So that's why they're printing money. So my thesis is taxes are going to go up. And the only way they can do that is capture as much capital as possible within the taxation system, which is fine. I mean, that's why you choose to live in a country you choose to live in and whatever. But then the introduction, so I've been following the story of behavioral economics and how powerful it is. I mean, that's why we all follow slavishly likes on Twitter and retweets and all of that stuff, right? It's all behavioral economics. Daniel Kahneman taught all of those guys from Silicon Valley how to turn us into dopamine rats. Now, what I realized with CBDCs, it does the same, but with money at scale. And so what governments were able to do was some really good things. Like we saw the stimulus in the pandemic, a billionaire got the same payment as somebody who's on the breadline. That was crazy, but there was no way of segregating people. So once you can do it on a central bank digital currency, you can give different stimulus to different people. You can give regional stimulus, you can give stimulus, you can do all sorts of things. You can penalize excess savers and incentivize people who don't have any savings. You could give poor people 10% interest rates and super rich people 1% interest rates. There's a lot you can do that is actually very powerful in running economies. The dark side of that is it'll get used for bad. And it'll get used in ways where they can stop you doing certain things with your money. A lack
Canadian truckers, right?
That's right. I mean, so it comes with a lot of really good things and a lot of really bad things. And governments over time will always err towards the bad things too. Now, the balance is, who do you vote in? Who do you agree with? But it's usually like a frog in a boiling water. People don't realize until it's too late. And I realized that having freedom over your money, particularly, and this went back to my 2012-13 thesis on Bitcoin, is a bearer asset in an over-leveraged world is incredibly valuable. Because you've seen it, FTX and all this stuff where they're using your asset as leverage. When something goes wrong, there's not enough collateral for all of the debt. So poof, your money's gone. That was the European banking story as well, and the 2008 crisis. Now, if you own Bitcoin, store it in your ledger, you're out of that system. So yes, you have to stomach the volatility of Bitcoin, but the good side is nobody can take it away from you. And that is unbelievably powerful. And it's really interesting to see Larry Fink starting to talk about this. A system of international money is something we have needed that is free of government interference. Now, somebody like America will say, well, those people bad, us good. Everybody's equally bad. They'll find ways. The Chinese have a social scoring system. The US also has a surveillance state. I mean, I go into the US, I'm scanned immediately for global entry. They know where I am. Everywhere you use your Apple Pay or whatever, everybody knows where you are. Google Maps tracks you. I mean, you are tracked in every inch of your life. Now, you can still track Bitcoin, but at least it's in your control. Somebody can't say, well, that's mine now. That's incredibly powerful in this world. And obviously it's functionality within a digital world where our lives are becoming increasingly digital.
Raoul Pal sheds light on the enormous potential within the cryptocurrency landscape. His early predictions and adoption of Bitcoin and other cryptocurrencies serve as a testament to the influence of innovative thinking and the revolutionary capacity of blockchain technology. The entry of institutions like BlackRock, Fidelity, and Charles Schwab into the cryptocurrency realm validates the foresight that Raoul once envisioned. For young investors or those seeking substantial wealth, Raoul emphasizes that this could be the most significant opportunity you'll encounter. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.